In Europe, BMW's electric car sales surged a staggering 64% in the first 3 months of this year. Out of all the German brands, Porsche, BMW, Audi, Mercedes-Benz, Volkswagen, all of them are struggling, but one of them is doing better than the rest. And interestingly, that one is selling more electric cars than the rest of them as well. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. Guys, it's great to have you with us. BMW, their electric car sales are growing significantly. They are easily outperforming, in particular, their direct rivals, Mercedes-Benz and Audi. And as a result, well, they are doing significantly better. BMW's electric car sales in Europe are up more than 40% in the first quarter of this year. Worldwide, their electric car sales grew by just over 30%. And as a result, well, that means 19% of all cars that BMW sold, basically 1 out of every 5, was fully electric, a fully electric car. And this is significantly better than their rivals. BMW Group reported its Q1 2025 earnings, highlighting a really good performance, better than analysts expected, driven by electric vehicle sales and operational efficiencies. The company's earnings before tax reached around about 3.1 billion euros, so about 3.4 billion US dollars. Revenue was 33.8 billion euros. Stock rose 3.2% as investors reacted positively to BMW's strategic focus on electrification and cost management. According to Investing Pro data, BMW maintains strong profitability with a price to earnings ratio, which is actually appears to make the stock quite good value, of 6.66. Interesting number, isn't it? But that means they're one of the more attractive valued automotive companies. So what are the key takeaways from BMW's first quarter of the year? Well, it wasn't all good. BMW's Q1 earnings before tax were 3.1 billion. Revenue for the quarter was 33.8 billion. Electric vehicle sales increased by 32.4%. Stock price increased by 3.2%. And the company maintained a strong order intake in Europe, where their electric car sales are, well, they're skyrocketing. Now, it's worth pointing out it wasn't all positive, though. Earnings were actually down by 26.4% versus the same period last year. So earnings going down 26.4% is similar to Audi, similar to Mercedes-Benz. Companies that sell more electric cars their earnings are going down. Their margins are quite slim. And they're still struggling to sell EVs and make a profit. And the key reason for this, they just don't yet sell enough of them. Here's an example of what I'm talking about. If 50% of all of BMW's car sales were electric, it would be much cheaper for each individual one to be made. And the reason is this: for each doubling of production, every doubling, so when you make twice as many, prices generally reduce by 20%. And that's the key here. The main reason for BMW's profits falling by 26.4% was its weak business in China. US tariffs, which had little impact on these figures, will likely have an impact later in the year. However, BMW is sticking to its forecasts. The more demanding the environment, the more crucial products, strategy, and flexibility become, says CEO Oliver Zips. The company serves diverse customer needs worldwide and can thus achieve robust results, he said. Well, first quarter sales figures published in April had looked ominous. The significant decline in China had dragged global sales of the BMW Group, which also includes Mini and Rolls-Royce, into negative territory. Specifically, by 1.4% to 586,000 cars. So yeah, sales went down, but not by much. 1.4% is not too bad. This did result in revenue that was 7.8% less than a year ago. So yeah, revenue is down by 7.8%. Now you'd think, well, revenue down by 8%, profits would fall a similar amount. But as you can see, profits did not fall a similar amount. Profits fell much, much more. And this is the same story for most German automakers at this point in time. They are really struggling with profitability. In day-to-day business, however, BMW performed better than experts actually had feared. Earnings before interest and taxes fell by 22.5% to 3.1 billion, but they do have to pay taxes on those earnings as well. In automotive manufacturing, operating margin, which is closely monitored by the capital market, fell by 1.9 percentage points to 6.9%. Now, 6.9% operating margin for a luxury car manufacturer is really not great. But all of them are showing similar numbers of profitability at this point in time because, like I said, China is hurting. Selling more electric cars is actually hurting them. In the long run, it's the only decision they can make. They have to sell more EVs. But at this point in time, it is obviously causing a significant profit decline. However, these numbers, 6.9%, were still higher than analysts expected. BMW is not alone in its profit slump. Arch rival Mercedes-Benz reported a significant 43% drop to 1.7 billion. The other major premium competitor, Audi, reported a mere 630 million in profit, and its profits obviously slumped as well. In fact, its profits declined by 14%, which sounds better, but it's not really, because in the first quarter of last year, which we're comparing the company to, its profits fell by 75%. Volkswagen, it was pretty bad for them too. They made 2.2 billion, a drop of 41%. So in Germany, people are very, very concerned. The mood in the German automotive industry, as per Spiegel Business from Germany, including its suppliers, is poor. It's very poor. Sentiment is very negative on all ratings-based mechanisms. The Business Climate Index for the sector compiled by the IFO Institute is deeply in the negative territory at minus 30.7 points. Export expectations in particular have declined again. And according to economic researchers, companies who also assess their competitive position outside the EU assess them as weaker. Now, Spiegel says this: essentially, there are two major problems that plague the industry, which is so important for Germany. Increasingly fierce competition from China and fears about the future of President Donald Trump's tariffs. Even the US company Ford has spoken of losing billions of dollars this year because of Trump's trade policies. Although BMW produces roughly as many cars in the US as it sells, with just under 400,000 vehicles per year, more than half of these are exported from the United States. And that means that a lot of the cars that BMW sell, about half of them that they sell in America, are actually made outside of America. Now, the crazy thing is, this situation, it's going to be bad for BMW, but it sort of sucks that it is, because due to the number of cars that BMW exports out of America, they earn the company the surprising title of largest US auto exporter by vehicle value. But it also necessitates the import of other cars and parts into the US, and higher tariffs are therefore a significant burden for BMW. The costs will run into the billions, say analysts.